Hello everybody, welcome back. I'm going to shed some light onto the hopium and the realistic view of why buying into Bitcoin incrementally on the way down is probably your best bet from this point forward, right? Might not be the ultimate trade, but it'll be ultimately rewarding given a few years. And this is always the way you need to think about things. Don't look at things in a 5-minute time scale. Don't act like a goldfish, right? Just think about things realistically, all right? I know everybody's sold the crypto dream, which is, buy this, it goes straight up, I'm a millionaire, and you'll get people posting things on Instagram going, look at me, look what I just bought. Reality is, that's not the actual reality. Yeah, of course, there's loads of money to be made, and I'm not joking. I've made quite a lot of money myself, and all of that is to be seen on the channel. But this channel has been going since, 2019? And throughout that period, there's been a lot of meandering, sideways, ups and downs, and then there's the occasional 100x amongst all of that. But it doesn't happen overnight. Anyway, let's think about Bitcoin and only Bitcoin. Bitcoin being the major indicator and the first step of building any kind of crypto dream. Because first of all, Bitcoin is the appreciating asset here. All the others are highly speculative within the realm of a speculative asset of Bitcoin itself, right? So we start with the building block of Bitcoin and then we trade out of that into altcoins when the time is right, okay? So, I'm not saying that this is the best place to buy, but it's a starting point, right? So this is your log scale. We've seen this on the channel before. I'm speaking to people, hopefully, that haven't watched this channel in the past, but this is solely a hopium video. So this is a log scale going back to 2013. So far, it's always held. We've had 2 bear markets, 1 black market, black swan event, and now, right? And again, we have a 4-year cycle. The 4-year cycle still remains relatively accurate to a point, really, but we're also going through a huge financial meltdown. Well, I wouldn't say huge, but significant because it's global, and that could only be halfway done, right? Who knows what's going to happen? It's all to do with interest rates, generally speaking, and inflation. So that is the main driver, and obviously crypto falls very much within the grander context of everything coming down. So everything's coming back down after the pandemic, the pre-pandemic crash, and then the post-pandemic parabolic run, which is this to this, and all markets more or less had that. And there's many other markets that we haven't really looked at or thought about, like housing markets and even car markets, rented car markets, all kinds of stuff. Everything's built on debt, and this is the problem at the moment. And so we're waiting for what could be another calamity event similar to 2008, maybe not quite so bad, but similar. And that would mark the absolute low, a capitulation low that would be similar to this wick, which broke down from here, but got reabsorbed back up into this trend line. And so what we're looking at here is effectively a fair value for Bitcoin for where it is, and given the scarcity of the asset, right? And so we're talking about bang, all the way to the bear market, all the way up. There's your bear market bottom. Here's your little run. Here's your, I suppose, your candle body bottoms, all the way up. And now we have been approaching this. Now, obviously, all models only last forever. This can't go up, well, in theory, I suppose it could, but it can't really go up forever, because if that was the case, it would end up having more money than is available in the planet. At some point in the next few hundred years, it would just go up to a ridiculous figure, and so eventually it's going to have to break down. Could this be the point where it does do that? Of course it could. But has it done it yet? No. And are we allowed to have wicks that break down from it? Yeah, of course we are. And again, this is a log scale, so it looks like it's small, but really they're not that small. And that was a 25% wick that came down from below this area, an area which has held through 2 bear markets in the past. So 25% below the fair value, which was obviously scooped back up. As you can see, look at this. This is a monthly candle. The wick sucked straight back up, and then obviously with the help of the Federal Reserve, all the way up to the moon. So that is stage 1 of hopium. All right, there's no point in dancing around this. This is what it is, and it is an indicator. It's a trend line. It's one of the oldest ones that we've got for Bitcoin, and it's still holding up okay, give or take a few grand, right? A few grand, which is, again, this is a volatile asset, all right? We're looking at monthly candles here. We've recognized that we can come down here dramatically, but it's a fair value. So if we're thinking about dollar cost averaging, we're thinking about this area as your first call, as a decent area to start doing it. And anywhere below that is more than fair value. It's a bargain. It's an absolute bargain. based on this particular model anyway. Right, so let's go over to an actual chart, and we'll have a look at something else. So this is the last cycle, including the end of the bear market. So there's your parabolic top 2018 reaching a $20,000 high, and then basically collapsing into its own shadow, a pool of its own, red candle bleeding out blood, right? We had a low here formed on the money flow index, and again, I'm speaking to people I'm sure that have watched me talk about this, especially Patreon members. We have divergence on a money flow index. Now, money flow index is really good at spotting tops. It's spotted tops over here, and a top over here. It's not so good at spotting bottoms when it comes to extreme lows. That's not what it's good for. It's good for spotting tops because we're looking at high liquidity, order books full, and people basically just pouring money into it. So if you've been in this asset for a while, you want to get out of it, you get out when the money flow index is high, because you're going to get a very good fair value, because there's more people putting in than there is taking out, and basically you're looking to basically get out as close to the top as possible, and the best time to do that is when the money is at its highest, when the volume is at its highest. So that's why it's good at spotting tops. At bottoms, not so much, because something could go down, keep going down, get very unpopular, and it could actually die, and the money flow index will die with it. And then when the volume is, let's just say in an extreme read, 24-hour trading volume of 0.5 cent, all it would take would be another 10 cents to go in, and you'd get a money flow index read like that. And again, I'm talking extremes. Obviously, we don't expect Bitcoin to do that, but that's what it is. So it's not very good at spotting bottoms. It's just a volume indicator. It's very good at doing tops, because it tells you when something is overheated and when your best time to get out would be, because you want to be selling for the best amount of money. You don't want to be selling on the way down. You want to be selling on the way up, and this is the best way to do it. But at the bottoms, what we do get, instead of extreme reads to their lows, we do get divergences, showing that, we got a low here, and we've got a higher low here, similar to the way you would read an RSI for bullish divergence. This is a weekly chart, so it's very difficult for an RSI to provide weekly divergence on that kind of time scale. It's very, very hard to do it. You can get bearish divergence, as we got over here, spotting the absolute top over here when it comes to volume, and the absolute top when it came over here, lower high, lower high, lower high, basically on borrowed time. Same with the money flow index. But you don't generally get higher lows forming on RSIs on weeklies. It's too much of a lagging time span. You're just not going to get it. But we have had 2 instances of spotting the absolute bottom with divergences on the money flow index. So that would be this one here, marking the absolute low in December 18th. So we'll just increase this. We'll just have a quick look over here. So here's your first read, the first low, the low being around 6,400, more or less this medium line here, where the equivalent of, I suppose, where we have been recently, around 30,000, and then this massive capitulation low, bang, all the way down to find itself a higher low on the money flow index on the weekly, more or less spotting the absolute low. Again, this is a weekly chart, so more or less, give or take, if you're a spot trader or you're an investor, you would take this and go, okay, interesting, high low, capitulation. This pretty much would suggest that the low is absolutely in, or within at least a 20% area. Okay, so we've got that here, spotting the absolute low. Again, what we've got over here, we've got our low, we've got a higher low here. So this low is formed at this price level, which is again around more or less about 6,000, 7,000 area. Oh no, where was it? Yeah, about 6,000, 7,000 area. And then we ran up, and then bang, huge, massive capitulation low due to the pandemic. Okay, and then what do we get here? A higher low, significant one as well. What do we get? We got sucked straight back up again, all the way back up. So what we've got here is a very pronounced low on the money flow index. So it's going to be difficult to not get bullish divergence on this. The question is, where does the low form? Because obviously this isn't going to tell us the price. This is just going to help us confirm if there is a significant low gets put in. If we still maintain higher low on this money flow index on the weekly, it would suggest, similar to these last ones, that despite coming down by 30, 40, 50%, which is what some of these crashes have done in the past, we've maintained a higher low on the money flow index. And then at that point, do we end up looking at this and going, well, actually the last 2 pretty much spotted the absolute low here. This has been a sizable dump. I know someone on Twitter said that it's going to go to 0, but I'm scared to do it. But I mean, don't listen to people on Twitter. I mean, I'm sure there are people on Twitter I listen to, so it's not fair. But I mean, there's a lot of things on Twitter. Let's face it. There's always going to be someone calling for lower. There's always going to be someone calling for higher. The idea here is that we're not thinking about making fast money. We're thinking about allocating a position into something which is going to do well over time. And I feel as though we're approaching that level. Could be sooner rather than later, but it's certainly, in my opinion, going to be this year. So that's not long. We're halfway through the year. All right, this is the good part where we spend time outside, enjoying the pubs and spending time with our families and stuff. So this is the good time. We don't really want to be sitting around trading anyway, but we can keep our eyes on the prize and wait for this to play out. Again, it could take days, weeks, or months. So we've got an idea that similar to the last two massive dumps, we are likely to get a similar kind of read. So the obvious place that this is going to go down to is this 200 simple moving average. It's around about 22,200 at the moment. That's where it is. Everybody has got their eye on that, and I mean everybody. Everybody's looking at it, which could mean one or two things. It could mean that it gets front run and never get tagged, or it could mean that it gets completely crippled and demolished, right? Absolutely demolished, because there's gonna be a lot of money in there, and if it breaks, the buy orders will not exist below it, right? They just won't. Everybody's going to be in there, and if there's too many sellers and not enough buyers, it will not hold, and it will crunch all the way back down. And it's at that point where everybody on Twitter will be saying, "It's over, guys. The 200 simple moving average didn't hold," and I'd be like, it doesn't have to hold. It's simply just a moving average. It's just like all the others. They go up, they go down, they're all around. It's a guide. It's a very strong area. It should hold, but let's just face it, if there's capitulation in the market, of all markets, like what we've said at the beginning of this video, we do not share this bear. This isn't an individual bear market for crypto. It clearly is a bear market for crypto, but it's not isolated to crypto. This is a part of a much bigger picture of a bear market across all indices, all countries, all stocks. Very few have managed to get out of this unscathed. All right, everybody's feeling it, and so that makes this area, this target, realistically vulnerable, because we know that the 4-year cycle matches more or less, and the models match more or less, but there's something lurking. There's an elephant in the room, which is the entire economy. Right, and inflation and geopolitical events and all this other nonsense, which is basically allowing for everything to trend down together. That's basically it. And so we can focus on this, and we can hope for the best on it, and obviously have our buy orders on it. But it might not hold, or it could get front run. Like I say, it might not ever get tagged. Bitcoin could go, I'll see you at the 200 simple move. No, I won't. Ha ha. Psych. That could easily happen as well. So like I say, nobody really knows, but what I would put out there, and I've made a video yesterday, and again, today, the video that you're watching today was made yesterday, because I have swimming lessons with my 2-year-old, and usually Mondays are pretty hard for me to make videos, so who knows what the price is at this very moment in time. But this is a video about the long term and planning for the long term, so it's kind of relevant. You can put it out at any point. But I don't know what the price is as we speak, or as I'm speaking now, as you're watching this. I don't know what it is. But I imagine it could be anywhere from here to here, basically. And this is, like I say, we're looking at this on a weekly, we're focusing on weekly, we're thinking in terms of a weekly. We're not thinking like a goldfish smacking its face on the side of its bowl. We're thinking, like I don't know, a killer whale that's got the entire ocean to float around in, and all the time in the world, and not particularly bothered about anything in the short term. We've got our areas planned. We're thinking about buying dips as and when they come, and we are not expecting this to hold. We're also not expecting it to get tagged. We're expecting all kinds of stuff. But what we are thinking about is that anything from this current level, based on the logged scale here, is fair. It's fair, because if we do come down by another 20, 30, 40, 50%, no big deal. It's very likely to get sucked straight back up, and we will continue with the model. And look where the model goes to. It does go to 100. It goes to 150, 100, 200. Where it does go there, right? The thing is, you've got to look at Bitcoin similar to the way that you would look at the Nasdaq or the S&P or the Dow Jones, or maybe even the FTSE, but probably not. But you see what I mean. You've got to think about it in those terms, right? Because that's the best way to look at it, and that's what the institutions are looking at. That's what these countries are looking at. That's what most people are looking at when they look at Bitcoin. They're not looking at this going, "Oh my God, it went down today." They shouldn't be looking at it like that. And if they are looking at it like that, it's not for them. All right. It's not for them. Investing is pretty easy, and it shows you here on this log scale how far it's come over a relatively short period of time, you have to admit, and where it's likely to continue to go in the future. So we're looking at obviously diminishing returns with each run, with each cycle, but we're still looking at significant gains. So I'm going to put it to you that this is an ultimate hopium style video. We're talking about things on the long term here. We're thinking about those of you that are looking to get in or scared of your position that you're already in. I would make the point here that we have not quite hit the low. We could have, but we most likely haven't. Any low that we get from here is a gift from the god of bears, right? And yeah, the bears will take it down to as far as they will take it, but it will get sucked up, because if there's an argument between the bulls and the bears get eaten up every single time. The bears are not as strong as the bulls. The bulls hammer bears on their chart like this. Similar to most major indexes, they will. The bears ultimately do get hammered. They come out, every now and then, and they feast. And then they go back into hibernation again, and the bulls lead the way, and this is one of those charts, and this is one of those opportunities. So think about it in those terms, right? Think about it in terms of months and years. And within those years, when everything's going up and Bitcoin's going up, you will then have the opportunity to trade into altcoins, which is something that you may or may not have done, and you can do very successfully, because Bitcoin is mostly a trading pair for most altcoins. And there will be a time where the market rotates into altcoins. You can use your Bitcoin to rotate into some altcoins, and those altcoins do go up very fast, and they go down almost as fast or faster. But at the same point, you do that is a bit more of a trading standpoint, whereas Bitcoin could easily be simply viewed as an investment standpoint. And as far as investments are concerned, it's worthy of investing in at this current point, and any price lower than this. Be very comfortable in saying that, and you can revisit me and this video 2, 3, 5, 10 years from now, and I can pretty much guarantee that I'll be right. There's no actual guarantees, but the chances are that this video will age extremely well over the years and obviously the decades to come. And so let's put it into context, alright? Stop smacking your face on the side of your goldfish bowl and think about picking it up with every low that gets lower than this specific line, which is currently roughly around 28,000, 27, 28,000, give or take. It's fair value, and it's worthy of investing in, and it will serve you well over the years. Anyway, I'll leave it with you there. Thank you for watching. Hope you have a nice day. Take it easy.